There's 20 trillion in US bank deposits, but only 2 trillion exists in actual cash. The other $18 trillion, it's not hidden in vaults, it's not in the Federal Reserve, it simply doesn't exist. Yet somehow, the entire economy depends on pretending it does. Now let's examine the other half of the Mandrake mechanism, fractional reserve banking. Here's how it works. Imagine a goldsmith in medieval Europe. People bring gold coins for safekeeping. The goldsmith issues paper receipts. At first, the receipts are just claim checks, proof of deposit. But people start using the receipts as money. Why carry heavy gold when paper is easier? The goldsmith notices something. Most depositors never come back for their gold. So he starts issuing more receipts than he has gold. He's created money out of nothing but paper and trust. This is fractional reserve banking, and it's fraud. Banks today do the same thing, but they've legalized the fraud through wordplay. When you deposit money at a bank, you think you're storing it for safekeeping. That's called bailment. But banks don't treat deposits as bailment, they treat them as loans. The moment you deposit money, legally, it's no longer yours, it belongs to the bank. They promise to pay you back, just like any other debtor. Meanwhile, they've lent that same money to someone else. Now 2 people think they own the same dollars. Your deposit slip says you have $1 million. The borrower has $1,000 in cash, but there's only $1,000 in existence. The bank has created $1,000 out of nothing, just like the goldsmith. Every bank does this, every deposit, every day, and it's perfectly legal. But it gets worse, much worse. Let's say you deposit $1,000 at Bank A. Bank A keeps $100 in reserve and lends out $900. The borrower spends that $900 and it ends up deposited at Bank B. Bank B keeps $90 in reserve and lends out $810. That $810 gets deposited at Bank C, which lends out $729. Your original $1,000 has become $10,000 in total deposits. This is called the multiplier effect. Banks didn't create wealth, they created debt and called it money. And here's the worst part. Previously, banks were required to hold a percentage of their deposits in vault cash or at a Federal Reserve bank. This requirement is now zero. Here's the terrifying part. This entire system depends on one thing: confidence. As long as people believe the money exists, the system works. But what happens when people want their money back? If just 10% of depositors demand their cash, the bank collapses. It's called a bank run. The money never existed in the first place. This is why the Federal Reserve exists, not to prevent bank runs, but to bail out banks when the fraud is exposed. The whole system is built on a lie, that deposits are safe, that banks are lending money they actually have. In reality, every dollar in your bank account is someone else's debt. And the moment people realize that, the entire system collapses.